Welcome to a video that I like to call the deep dive, where I go through all of the daily charts and produce a video where I cover a lot of the charts that I may not have talked about in this past week's daily videos. Sometimes we can still get some useful information, and other times it's just good to have an update on charts that sometimes are really important. Well, what are they doing now? And we can get a better view on what is actually happening in the market. This is being prepared for Monday, February 13th. The first chart is a VIX chart. On the bottom, there's a VIX RSI 9. And when we really pay attention to this is when we go down below 30 or up above 70. Currently, we're not showing any kind of an extreme reading. We are a little above 50 and advancing, which means that the VIX has been going up, but it's still giving a very low reading overall. Another chart just shows where are we since we hit the all-time high back in January of 2022. We're down 15.11% for the S&P 500. Another chart that I'm probably going to start showing if it keeps acting up is the VIX to S&P 500 correlation. We watched this quite a bit right at the beginning of the year, and then it dropped off the radar. Well, it's starting to go back up. It might be a little bit hard to see, but this ratio is starting to go up again. When we get to a high level, a lot of times that marks some kind of a significant event for the VIX. And then when we start to come back down, that can often give some support to the S&P 500. But there's been other times when it's also implied weakness for the S&P 500. So we'll just be keeping an eye on that one. Another area is support and resistance. We have the Ichimoku cloud. We spent a lot of time right at the end of December into early January down here between this red and green cloud, and then we came up off of that. When it changed over to green, that was more positive, but right now we're far away from both of the clouds, so I haven't been showing this chart in the daily videos. Looking at the technical alerts for Friday, I only show Friday in this video, even though technical alerts are generated every day. The list would be so long and it would take us forever to go through it. The ones that I really focus on are the S&P 500 signals, where right at the bottom, right after the open, we had a bearish MACD crossover for the S&P. The rest of these deal with other markets, other sectors, and other indexes, where right at the end of the day, oil had a bullish MACD crossover. We read this chart from the bottom up, because if you look over on the right-hand side, the time starts earlier and ends later. Another thing that's good to look at is how are all the indexes that we follow performing right now. The first place chart is the mid caps, giving us a score of 82.8. Over here is a chart just to show how things have changed overall. In second place at 70.6 are the small caps. In third place are the diamonds, which feed into the Dow Jones Industrial Average. It's showing a lot of improvement, but is still only giving us a score of 63. For these scores to be positive and well worth noting, we need scores that are at 90 or above. The next place is the S&P 500, giving us a score of 50.4. And in last place are the Qs, which are attached to the NASDAQ 100, coming in at 34. Looking at the trend analysis, this is an indicator called the Arun. And some people don't really understand why I use this for trend analysis. What I'm really looking at are the green and the red lines. When the green lines, which means buyers, when that's near the top, that means that a lot of buying is actually happening, and that can push prices higher when used in conjunction with our ADX indicator that we use to measure our trend. The red line shows the sellers, and currently we're seeing buyers start to decrease, but we're also seeing sellers not in control right now. After giving us kind of an extreme positive reading with our oscillator, which measures the buyers and the sellers, we're still positive and we're above 50, and we're coming down after giving a pretty extreme positive reading. Some short-term indicators. Here's our rainbow. We're still above the 10 through 50 simple moving averages, so this is holding up. We're currently using the 20-period exponential moving average as support. If we see more weakness, we will start to come down inside of this rainbow. The force index, after giving us an extreme positive reading, has been coming back down. It's still positive where it's above zero, but it has shown some recent weakness. Intermediate term charts, here's the open, high, low, close, and a 20-period moving average of each one. Sometimes these will act as support when we're going up. Sometimes they will act as resistance when we're going down. Standard deviation, how far are we away from the standard or average price? We're not seeing a real drastic change in our standard deviation chart. The mass index is not generating a signal right now. We only get excited when it comes up around this dashed red line and the solid blue line. Here's the 20-period double and triple exponential moving averages. That is the blue and green lines that are going up. Notice how we're down to the 20-period exponential moving average in our traditional way of using moving averages. These went up a lot higher, and we've already broken down below them. Another thing that we're watching for is the anchored moving average going back to the all-time high. We're currently right at about that level, and this could be providing some support. If we really start to go down, we'll be looking at this other anchored moving average going back to the COVID low in March of 2020. The Connors RSI works pretty much the same as the regular RSI. We look for extreme positive or negative readings. Above the dashed line is positive, below the dashed line is negative. We've been able to tick back up slightly above the dashed line. Our intermediate term rainbow chart measures 50 through 100 period moving averages, and we're still above all of these moving averages, and the rainbow is starting to turn back up slightly. The vortex measures buying and selling. The green line is buying, and even though that's on top, it is declining. The sellers, which are on the bottom, continue to advance, but they're not crossing, at least yet. Ease of movement just looks from one day to the next, showing that we were down in Thursday and Friday's session. Then going back 14 periods, we're still above this zero line, so that's positive, but we are declining. Money flow index is another oscillator, extreme positive or extreme negative. When we're above 50, that's positive. Below 50, that's negative. Right now, the money flow index is declining and below 50, so this is more negative. The Sean trend meter, which I did show in a couple of videos earlier this week when we were getting extreme positive, it's now started to come back down and is no longer giving an overbought signal. Our moving average study, which kind of comes in and out of the daily videos as needed, we really pay attention to this when we get extreme positive or negative. Well, right now, the 20 is moving down, even though it ticked up slightly on Friday. The 50 period also ticked up, and the 200 turned up slightly as well. The Chaikin oscillator, again, another oscillator that we use to determine overbought and oversold conditions. After giving us an overbought condition earlier in February, it's now been coming down. It's still positive because it's above zero and trying to turn back up. The boom indicator measures how far away are we from the 50 period moving average and the 200 period moving average, because moving averages act like rubber bands or magnets. When we get too far away, price will want to go back to that moving average. Well, we had a pretty extreme positive reading, but since then we've been dropping down. The 200-day moving average chart, we never did get extreme positive. We are above zero, although we are declining. So it's positive, but some recent weakness. The RSI based on 14 periods is still above 50. That's positive, and it's turned up slightly. The RSI 9, which is touchier, after giving us an extreme positive reading, has been coming down, and it's going back up, and it's still above 50. So this is positive. Our percent B indicator, this measures when we go outside of the Bollinger Bands, either to the upside or to the downside. We did have a recent extreme positive reading, but since then we've been dropping back. We turned up a little bit on Friday and we're above the dashed line, so this is positive. The balance of power, when we're above the dashed line, that's positive. Below, that's negative. We're still above this dashed line and it's flat in its recent reading. This chart is pretty self-explanatory. How far away are we from the 200-day simple moving average? We were able to cross above that moving average, and we're still looking better from that point of view, although we have come down from recent highs. The ultimate oscillator, after giving us an extreme positive reading, is declining, but it's still above 50. Looking at some different charts, the Heikin Ashi is now starting to show dark candles. That's negative. The Renko, though, still has open boxes. That's positive. The 3-line break has open candles. That's positive. Nothing new on the point and figure chart. We still are working off of a triple top breakout that was generated on February 2nd, but no new X's or O's were drawn this week. So this chart is still looking positive overall. Different trading systems, the go, no-go system, which is supposed to be an out-of-the-box color-coded type of trading system. When price switch from brown over to blue, that's positive, and that's called a go. You're going long. Now we're starting to fall back. We're turning a lighter shade of blue, and that's more neutral, but still positive overall. The CMB Composite Index is looking a little more negative. This is more of a shorter-term trading system. We came up and gave a positive reading, then we started to fall back down. When we fall below the first line, that is a sell signal. And then when we fall below the green line, that confirms the sell signal. Some longer term charts. Here's a 50 through 250 period simple moving average rainbow chart. We're still above all of the moving averages that are plotted here, and they're starting to turn back up. But if we continue to fall, it's going to make this chart look a lot messier. The Special K, which is a very long-term oscillator, to understand the trend, it's still negative because it hasn't crossed over the moving average yet, but it could be getting ready to do that. The bond market, looking at the Vixen, which is the VIX for the NASDAQ 100, went up a little bit in Friday's session based on the bar chart, but we did close down just a little bit looking at the line chart. Some bond charts. I'm not sure if I'm liking this chart right now. When this goes up, that means there's a lot more fear. When it's going down, that means there's less fear. Well, we spent a lot of 2021 and a huge part of 2022 with this chart going down. So that's kind of why I'm putting this on the sideline for right now. Some range of change charts. I just show the long-term ones. Here's a 250 rate of change where we set a low and we're trying to come back up and show some improvement. Here's an even longer chart going back to 1980 where we possibly set a bottom matching the COVID low and we're starting to go back up. We do have a number of inverted yield curves, the 10 to the 2, the 10 to the 3 month, the 30 to the 5 year, and the 10 to the 5. All of these yield curves are now inverted. They're below their red lines here. The bottom chart would be a lot more helpful, but the Fed funds rate is not updated all that much. I do have another chart that shows a thing called the euro dollar, which I may introduce if it starts telling us something interesting. An update on our possible positive scenarios. I really didn't show them this week because we were pretty much choppy to down for the week. But looking at the QQQs to the S&P 500, the ratio is still positive overall, even though it's showing some weakness. The same thing can be true with discretionary to the S&P and large cap growth versus large cap value. So they're positive but rolling over. Then looking at some growth and value ratios for the large cap, still positive but rolling over. The mid caps, same thing, positive but rolling over. We never really broke out with the small caps, and that is still a bit underwater. Another chart that I've been showing for other reasons, we can use this as an overbought, oversold indicator, and that's really what I was bringing up when I brought this chart up. I was looking more at volume, and we were getting an extreme positive reading and then coming back down. What we see based on price is we're dropping below the zero line, so that's more negative. We're coming down, but we haven't crossed below zero yet based on volume. The 200 period moving average study shows we had an extreme negative reading and we've been bouncing up from that. We came up pretty high, but now we're starting to come back down. As price has been fluctuating and going lower, these charts do show some weakness. Then looking at those stocks that are above their 50 period moving average inside the S&P, after giving an extreme negative reading, we came all the way up. That really didn't give a lot of support to the market. We saw some exhaustion. We fell back down, we're coming back up, and now we're just kind of bouncing around. Also looking at the mid caps, this also gave us a reading that got almost extreme positive and has now been dropping back. Looking at the small caps, same thing, almost extreme positive, and it's now been pulling back. This is a chart that I've been showing from time to time. We're back in October. Based on the NYSE breadth thrust, we take an 8 period moving average of that indicator and plotted on this chart. We had an extreme negative reading back in October and we've been bouncing up. This chart's been holding up for right now. And projecting out 1, 2, 3 years, it has a perfect track record. Doesn't mean we're going to go straight up. There could be some real bumps along the way, but when you project it out like that, it tends to be quite positive. So that's adding more to our positive backdrop. The small cap to S&P 500 ratio, when this red line is going up and starting to spike up, that often gives some support to the blue line, which is the S&P. That's just not happening. The red line spiked up and it's now coming back down. The 2-year Treasury yield, when it spikes and starts to come down, that often marks a point that gives some support to the S&P. We do have a little spike here, and it started to come down, but now it's starting to go back up. Another chart that I've been showing a lot in most of the videos until just this past week is the equity put call ratio. One of the reasons I'm not showing that as much is this chart is not often updated many hours after the market closes, and it doesn't really do us any good to look at old data. Right now, the ratio is not giving us all that high of a reading, but it did tick up in Friday's session. Here's a 5-period simple moving average, which is continuing to go up, and then I have a longer term chart, and when this spikes up and starts to come back down, that often gives support to the S&P, and that's really what we've been focusing on, but we're not really seeing that yet. And then another indicator that we use is a 253-day simple moving average. That's more of an exact number of how many trading days there are. When this goes up, that means the market's going down, but you can see just barely it's starting to roll over. Now, we don't know. Is it going to go back up, or is it going to continue to roll over? That's why I haven't been showing this in the videos. Thank you. I hope you found this useful. If you use it in conjunction with the daily video updates, even the weekly video updates and the intermarket analysis video, I hope all of them together are very helpful and help you to make good, solid decisions. So I will talk to you in the next video.